Okay, we're live.
All right. We are live, guys. Bootleg Weekly, massive number of topics today. Tevis was kind of joking, but also not really. But before today, he's like, hey, we need to have a 4-hour stream. We're not going to do that today. Don't worry. Have a normal stream. We do have a hard cutoff. We may have a bonus stream later this week, possibly on Friday, before the normal FinTech Friday, SoFi Weekly type of thing. If we do, we'll be sure to let you guys know. As always, thank you guys for joining with us. Put your questions in the comments if it's related to topics that we're covering at hand. We'll hit those for sure, or we'll try to. And then we'll try to have a Q&A period as well towards the end too. So, Tevis, how are you?
Good. Just organizing all the topics. I cannot believe, did we skip last week? I can't believe it's only been 1 week.
No, it's so much news. Like,
we need to have a show twice a week.
I was thinking like your 4 hours. I'm like, we could do 4 hours, but it's more like a 2.5, 3 hour. And then all the stuff today that came out and further iterations of like the Warner's Brother, Netflix, Paramount stuff. There's Palantir breaking news. We can talk SoFi and dilution, which is, happened, I think, afterwards, actually, where we met last. We did talk about that on FinTech Friday. BMNR is actually moving. Ethereum, the Fusaka update. We've talked about that in the past, but that's starting to move as well. A lot of macro stuff, US, China. We're looking at, rate cuts coming up, looming fairly soon. There's even some PayPal. It's just like everything. NVIDIA is maybe like the biggest piece there, but I don't know. Like, where do you want to start? I don't even know how to begin this. It's like being served this colossal feast. And you're like, okay, what do I eat first? So where do we go?
Let's start at something that we can knock off quickly.
HIMS 2 is something we need to talk about, the acquisition.
Yeah, let's start at something we can knock off quickly, and then we can jump into the meatier topics a little bit halfway through the show. Also, I think if we're going to do a show on Friday, I'm not sure if we are or not, but if we are, then we should just determine what topics we want to cover today versus Friday. Because I'm sure like the news is going to pile up again for Friday.
Oh, yeah. Yeah, I say we hit what we want to hit today. Maybe a quick topic would be HIMS. So HIMS announced a acquisition. It was kind of received. There wasn't as much noise about it as you normally would expect.
So let me
pull this up here and share the screen. Yeah, I think it really does show sentiment. Some bears actually noted that too, that in the past when HIMS would issue a headline like this is just, it was December 4th. I know it's not the most recent, but it is more recent from our last bootleg. When it would announce things like this, the stock would easily pop, 15, 20, 25%. It's still heavily shorted, but the interest in HIMS is just not there nearly as much. And so this little piece right here, was coming on the back. Well, actually, there are a couple of acquisitions. So not just Live Well, but also, I don't remember the name of it, the blood. Oh, yeah, thank you. Yeah, if you can pull that up too, Tevis, and we'll show that too. So this was an announcement building off of Novo Nordisk's lapse as it related to the semaglutide patent. Funny story that we went through months and months ago. So they're launching actual branded semaglutide in Canada in January. They acquired Zava. Was it like 6 months ago or so, for international expansion, partly for Canada as well. And then they also noted that they are doing an all-cash acquisition, which they did an equity raise a while ago, not recently here, for things like this. And so they're acquiring Live Well. And then, so no problem with this. You're, of course, in Canada. We'll have to see how that works. But the other acquisition, Tevis, that one is kind of strange. So
really? Okay. So, yeah. You can talk to it if you want.
Okay, so like for some context, basically you're looking at earlier. It was either very early this year or late last year, but about a year ago, you had Tribe Labs, which they acquired, which is for blood lancets. And so basically, you'd get this mail order kit that you'd be able to do in-home testing for certain things. And so it seemed like between that and also HIMS Labs, that things were pretty well covered. HIMS Labs is more of a recent launch. Mm-hmm. When this was announced, HIMS, the Your Bio Health, I was a little bit confused because I'm like, well, they acquired Tribe Labs already for in-home testing. HIMS Labs is a little bit different because you actually go into a clinic, you have your blood drawn, and then it's actually tested. You need more blood for that than just Lancets can do. And so I was like, are they buying the same thing that they already own? And it's not quite that. There's some differentiation here. You kind of broke it down there, Tevis. So if you want to explain some of the differentiation, I still have some questions, and maybe I'll hit those right after you kind of explain what this is and your take on this.
Yeah. So your bio basically has this device here, and it's a patented method to collect samples. The way that I understood this was to overcome the barrier of people being reluctant to give samples in the HIMS, like the tribes labs side of the business. Like, I think the data is really the underlying play there, and the more data that they can collect, the better the better that flywheel is going to be. But if people are reluctant to give their data, then that's not going to bode well for them. So that's my understanding of this. It's also like a fairly small acquisition, so I don't know if it goes beyond that.
Yeah, and it's nice to have, like, nobody, even with Lancets, I don't think loves being stuck by needles. I mean, I can't say nobody. There's some weird people out there, but most people don't like that. So having something that can be done, it's not exactly the same thing as Tribe. It's actually very different. And this also allows them to actually do some testing that's above and beyond what you can actually get from just the amount of blood you get from a Lancet. So yeah, we don't know and have any details as far as how much this is, but it says you got it right there. It's an all cash deal. So again, this is cash that they raised, probably a smaller acquisition, probably a bit larger than Tribe Labs, but maybe on the same par as LiveWell. I'm not really sure. But yeah, regardless, it's not bearish news. It was just kind of weird, and the market reaction was as if this didn't even exist because it was a little bit confused on what strategy is. And I think that's one of the things that maybe is hindering HIMS is they'll have a lot of announcements. They do a great job on that and of communication and communicating new things. But the grand strategy, it's there, you can see it, but I would say it's a little bit murky. It's kind of like, you can look at a very clear lake or body of water and have a clear picture of what's happening. This is more like somebody threw in a rock or threw in some mud or something. So it's all diffused in there, and so you can't really see with picture clear clarity what HIMS is exactly trying to build, or at least how these fit in specifically and how they're lacking. At least that my take. So it doesn't really change anything or move the needle for me for HIMS, but yeah, it's interesting.
I think a lot of shareholders are in the same boat where it doesn't change anything for them because the stock didn't really move on either of these pieces of news, even though they came out back to back. Like, I think one came out on whatever the Wednesday and the next one came out on the Thursday or something like this. Just back to back acquisitions. They're small. They're within the wheelhouse that we were expecting with regards to their like building on the Tribe Labs and building on the Canada expansion, both of which were already known factors. So I'm not too surprised the stock didn't move, because at the end of the day, like, there's no real financial benefits to it right now. It still has to be proven out. And a lot of them are going to be in Q1 of 26, even closing. So it's still early days.
Yep, definitely. Yeah, we'll have to see. But yeah, hopefully they'll especially that Q4 earnings, which will be early next year, they'll be very clear on what they're building, especially this year, what the Canada launch looks like, and it'll be really interesting to kind of keep a tab on that. They've had a little bit of international exposure, but it's on the wholesale side in the UK. Zava was like a real international exposure. LiveWell adds to that. This piece could add to that as well. But it'll be interesting to see in particular how it goes internationally in a place where, like, medicine is more heavily socialized. One thing that was interesting with the Canadian piece is it looks like, based on the announcement, I think Nurse Berger had noted this, and they do a good job of breaking some things down with HIMS, that they'll actually accept insurance there, which we'll have to see if that's kind of the roadmap that they end up using for a lot of international expansion, where it's a more heavily regulated market that is extremely based around insurance, the socialized healthcare type of thing, or not. But
yeah, I think you have to accept insurance here because it's a different system altogether. Like you won't get anywhere if you don't accept insurance here, because of the healthcare, like the free healthcare, whatnot. It's all covered by insurance, right?
Yep.
Okay, let's wrap up the HIMS chat. We have so many things to get through, man. Appreciate everybody for being here. Thank you so much. And we have a lot of stuff to talk about, guys. I have this list up here, Roy, that Gemini made for me. So we can knock off different tickers that we want to talk about. I know Palantir is here. Maybe we want to do that next because that's short and that's breaking. And
Palantir and PayPal would be a shorter one too. We can also say that for Friday. Maybe we'll save that.
Singapore too.
Ooh, yes, we have to talk about Hood. That dude, like, oh man, that's such a company.
Hold on. Did you guys did you guys not do a show yesterday?
No, we have not for like a month.
Oh, really?
Yeah.
Dude, where does the time go? I swear, it feels like a month since we chatted.
Yeah,
anyway.
It does.
Okay. You set up the stage for Palantir. I'm going to get a Celsius and I'll be right back.
Celsius, yeah. By the way, I'm trying. This is an inferior energy drink. I'm sorry for anybody that likes it. Like, if you like it, that's fine. But yeah, Starbucks, they tried. At least we can say that. Maybe there's a reason why their stock hasn't performed very well. I don't know. But yeah, Palantir had breaking news. And so let me share this. So, all right, let's do it this way. Oops. And as I share this, by the way, yes, the stock is still expensive. I know we'll see that in the comments. Everybody can type that. That's fine. Yeah, bullish Celsius. Much better. I show in the audience. I'm drinking the Starbucks energy drink for the first time. It's terrible. It's just really mediocre. Well, it's $1.
Paying you to drink that?
No, I mean, it was $1 at the gas station. I'm like, well, probably something's wrong with it if it's $1, but I'll try it. Although
this is my first Celsius of the day. And nice. I've been waiting for this moment to be on stream so I can drink it because I don't want to do 2 Celsius a day because my heart's gonna explode. But I've been waiting for this moment.
All right, so oops, that's PayPal. That's not intentional there. Okay, Amit kind of broke things down, but in essence, the U.S. Navy and Palantir are partnering again. Shouldn't surprise anybody. And it's a $448 million strategic investment with what's called SHIP OS. And so one thing that the government, also Palantir, has been talking a lot more about is, of course, making sure that we have control of our strategic assets. And something that's no longer happening at the United States, for the most part, is actually building ships. We've outsourced a ton of that. Some of that goes through, of course, South Korea. Hyundai Heavy is the main, we're one of the main providers of that. And so like this was really interesting to me, not so much for the 448 million, because again, Palantir is incredibly expensive, but this just showcases the strength of Palantir. So I'm going to hide this. You guys can read that post if you want to. But let me take you through just like a little bit of a journey real quick. Back in 2022, Palantir was treated like it was just a joke of a company. It wasn't EPS profitable, so nobody took it seriously. They had DPO'd instead of IPO'd, and people held it against that. Boy, I'm looking like I'm fading into a different color or something. Let me do this. Nope, not any better. Low grade, by the way, set up at work, guys, so bear with me. I forgot to bring my extra camera. Got a late meeting here at the workplace. So, but yeah, anyway, they ended up branching out in 2022 with Hyundai Heavy. They announced a contract just to actually build a big data center, basically, or a big database, because this is a massive company over there in South Korea. And then shortly thereafter, they're like, man, this is incredible technology. And specifically on the shipbuilding front, Hyundai Heavy Industries, HHI, said, we need more of this. And so they announced a contract expansion late 2022, specifically relating to shipbuilding. And I remember that time because I was like, well, the whole market and everybody is just yawning at Palantir. This was close, I think, to the time it was in September of like, I think Palantir dipped below 6 around this time. And I'm like, okay, I mean, like it's extra money. We'll see where it goes. But I had in mind because we had seen this even at that point. Palantir is an older company. The commercial side was fairly new, but U.S. government was much older. And they've done a great job along with this product as well of going into a new space. that they know nothing about. Like forward deployed engineers, they know Palantir code, they know how the technology works, but they don't know anything about shipbuilding at all. And then they'll end up partnering with somebody like Hyundai Heavy that is a domain expert in this space. And so they don't steal the data, they don't take the data. That's all held by HHI. But what they are able to do basically is figure out, okay, what are the things that this industry in this space is needing? Where are the weak points? Where are the missing pieces, the lacuna that's out there that we can actually hit and target with Palantir software? And as they go through this, they get very, very good at this very specific space. And then oftentimes you'll see further iterations either on specific companies, and we've seen expansions, and actually there's a lot of videos and things out there that Hyundai Heavy has released talking about this, and that it evolves over time where the contracts expand, they get extended, and then they start launching other products and suites like this shipbuilding OS, which is kind of an iteration off of Warp Speed. And so, like, what I found really interesting about this, Tevis, is so tiny contract, then a $45 million combined contract because they expanded it to this $448 million. And there's, I'm sure, a lot, there's probably some others that are using this as well. They wouldn't launch something like Ship OS unless they expected to have more. But they've done this, Tevis, from 2023, and before too, but from 2023 on, there was clear acceleration in Palantir and what they're able to do and able to launch. A lot of that was because of the AI moment. And so they've entered a lot of spaces where Palantir just didn't exist at all. Education is one of those. Financial side of things is another one of those. You see like Bolt and Bolt Checkout, like they partnered with that. You'll see in the next 2 years a lot of moments just like this where the market may have yawned at whatever partnership that Palantir was in, and it's a space that they hadn't been in before. And then in 2 to 3 years, not every case, but a lot of cases, you're going to see extreme growth and expansion in those spaces just because the Palantir software is so ridiculously good. And if there's a company that is using Palantir software and their competitors are not, they are at a disadvantage whether they know it or not. And eventually they're like, okay, we need this too. They can't compete. There's no alternative. So very bullish Palantir.
Very bullish Palantir. I love it. Yeah, look, I think I've said before, like the government contracts, they have cornered the market from a product offering there, and there's no real competition. So those contracts are going to only keep expanding as time passes. So I'm not really surprised to see this news at all.
Talking about the rate cuts, I've seen a couple of questions around that. Since that is going to be, we'll probably talk about it Friday no matter what, assuming that we'll meet together then. Let me pull up the rate probabilities. They haven't moved much. There was actually a funny post that almost went viral, or it went semi-viral by a larger account yesterday that said that the Fed governors were talking about 2 rate cuts and like 10 out of 12 from. And it's like, this is just fake news. And honestly, if you're deliberately spreading fake news for the clicks, I mean, you should be like just temporarily suspended, or I don't know. But yeah, we can see the actual rate probabilities. You don't have to take my word for it or Tevis's. This is CME Group, FedWatch. They've been using this tool for a long, long time. And interestingly, they're looking at getting into predictions market, which is like, I don't know. But anyway, they do predictions, kind of. And so this is maybe, this is related specifically to the Fed meeting. And so right now, rate cut probabilities are for 88.6% for a cut and 11.4% say, hey, we're going to stay. This has actually shifted a lot over the last month. Previously, and actually, if you go just a little bit further back than a month ago, we were looking at consensus view was no cuts. That's shifted now to the majority saying this. And if you look at, by the way, I think it's relevant, the end of next year, where we're currently 375 to 400. And so we're looking at, between, probably 3 cuts between now and then. So 2 next year, maybe 1 now, but we're kind of spread all over the place. These will tighten up as we get closer to time too. So Tevis, are we seeing a rate cut?
Yes, we're going to see 1. We're not going to see 2.
But that leak, that fake news, come on.
So that leak, I actually made a post on that particular leak. And I said, look, this is likely fake because Polymarket would have jumped right on this. And there is power in numbers. And the fact is that the masses If this was actually true and it was some substantiated article, then this would not be 1% chance in Polymarket. Polymarket didn't move at all. Call sheet didn't move at all. And so I'm like, okay, well, this is obviously not true because otherwise the market would have priced this in. There is no real arbitrage unless you go in super, super fragmented time segments like seconds. Otherwise, the market prices it in pretty quickly.
Yeah, that's one of the nice things about prediction market is people's money is actually on the line. So, I mean, they might make a small speculative bet or something, but if there is a concrete evidence that something is going to happen or not, and you don't see it in the predictions market, and you know about it, which a lot of people are. I mean, I think that we do live in a bit of an echo chamber on X and on YouTube as well, but there's a lot of people aware of, because there's been a lot of advertising around it, of the predictions market. And so people will take advantage of that opportunity every single time, especially, if you're looking at it 2 minutes after news drops, it's one thing versus like 3 hours and nothing's changed. That's fake news. Unless you know something, in which case go and make some money, I guess. But yeah, like the other thing too is Jerome Powell has done a really good job. I've been critical of him and also the Federal Reserve. Don't really love them that much, but he's done a very good job of not spooking the markets, except back in 2022 when they had to change from the transitory on inflation and start hiking. Other than that, and really since that time, there has been no Fed meeting that we've come to where there's been a lot of uncertainty around that, what they're doing on that meeting. Subsequent meetings, yes. And so I think that this is, again, like him basically encouraging governors to say, hey, it looks like we're heading this direction, get the word out. And, there's different views there, but I mean, there's a reason why it's almost 90% chance of rate cuts is because I think that's what's going to happen. Now, if we don't get that, I think the markets will melt down. Somebody kind of joked in the comments and said 75 basis points. If we get that, the markets would also melt down because it'd be like, okay, obviously, if they're cutting that aggressively, there's something really wrong. So just one rate cut, and that's perfect.
Fed's meeting tomorrow is more about their September projections. What is SEP?
No.
Rather than the interest rate.
It's not September.
Decision tomorrow, just my opinion.
Yeah, I mean, like, yeah, they have routine meetings. They meet no matter what. They discuss quite a few different things. And there's a lot probably on the agenda. Probably the most settled of those is whether they'll cut or not in December. So
is this like economic projections or something?
Oh man.
Employment. I'm too stupid to know what that.
It's not the dot plot thing. What is that? Summary of economic projections. So it's basically them forecasting several years out. So yeah. Oh yeah.
Yeah. So it becomes a lot about the commentary, and if the commentary is dovish or hawkish, and like people, I mean, we live in a world where people are betting on if Jay Powell is going to say good afternoon and what color tie he's going to wear. So obviously, people are going to be hanging on, certain terminology to determine if it's dovish or hawkish. And if you're going to be living in that world, and the baseline is that you won't get any huge shocks, so you're left to speculate on the minor things.
Mm-hmm. So if we get rate cuts, just one rate cut, what do you think? So we both own and hold SoFi, and SoFi, of course, is more than just a rate cut story, but that is a big part of the thesis just because they benefit so immensely from it.
Yeah.
What do you think the stock does? Or is it already priced in?
I think it's priced in at this point for one rate cut. I think we're going to have a green day. It's not going to be like amazing, like it's not going to be a knock it out of the park type of green day. But I think that we would have a red day if it was 50 bips or if it was no rate cut.
Yeah. Yeah. And on SoFi, of course, the 8K was filed yesterday, I believe, that indicated that the offering was complete, though there is a 30-day window to sell that extended 15% more, which I'm sure that they'll probably get another 8K that's filed in the next day or two that'll say, hey, that's completed as well. I mean, you always see that with this kind of deal. No further communication by the SoFi team. Does that surprise you at all?
No. I mean, I wouldn't expect further communication, man, because it hasn't closed yet. Well, right? It closed it closed yesterday.
Yeah.
I wouldn't be surprised if even for the 15% or whatnot, I wouldn't be surprised if we get some communication later on this week, but like just give it a little bit of breathing room,
Oh, yeah. It's, I mean, that's one of the things that SoFi does a lot of things well. One that they don't is communicating to shareholders. So we'll have to see if there's actually any communication. I think it might just be radio silence until the next earnings call, other than just the normal SoFi communication. So I think that'll be okay. I know a lot of people were speculating that this was going to be used for an acquisition. Of course, Crystal Point, I think the day before this raise last week, had said that this nothing was on the radar imminently, that they were basically doing window shopping. Of course, they did say that they were well capitalized and they didn't need to raise, and they raised immediately thereafter. So I'm expecting no acquisitions or no major acquisitions anyway for a while. Next year, I think probably, yeah, but maybe after the first quarter or two, because these things take time. And if nothing is imminent, I mean, a week later is pretty imminent to me. So I think it's unlikely. Yeah, I think Playmark is right. So what do you think on the acquisitions? Is that what this is for, or
the SoFi raise?
Yeah.
I mean, I think a part of it maybe could be acquisition related, but if it was acquisition related, obviously they can't talk about the acquisition until they close the round and secure the funding for the acquisition and like get into more advanced talks. Nor would they. I mean, I don't think they're a company that just makes promises and then goes and tries to, like, I think they, dot the I's and cross the T's before they announce anything. I think given SoFi's MO, I think it's probably more likely like debt related or using it to juice their EPS in some way, shape, or form.
Yeah, I mean, there's a lot of ways to do that. Optionality was the key word that Crystal Point actually used. I don't know if you noticed this, but that was also in that initial filing related to the reason for the raise, what it could be used for. Optionality, I believe, was there twice, and I'm like, okay, yeah, that was definitely. I mean, obviously, it was on the radar. You don't just go to Goldman Sachs the day after and say, hey, let's put all this together in like 3 hours. So,
look, I also want to bring up this, like how much will SoFi dilute us? Never going to explain. Look, I don't like dilution just as much as you don't like dilution. It was about 4 to 5% dilution, which isn't great, but good dilution versus bad dilution, the delta there is what they use the funds for. And if they use the funds to generate an ROI that is more than they're diluting you, then that's good. You want them to dilute you more because they will appreciate the stock price more than they dilute you. Last time they diluted the shareholders was $23. The time before that was $14. The time before that was like $8. And so like, okay, I'll take
this is better.
5% dilution every, couple of dollars of increase in share price. And don't forget that when they're diluting your, 300 shares, they're also diluting like Anthony Noto's, millions of shares position. And so he's diluting himself. And not only that, but he's also making it harder for himself to unlock new shares through his PSU tranche. Yeah. Point being, man, like 5K, 50K, who you have fewer shares than Anthony Noto is what I'm trying to say. And he also has an option to unlock more shares in June. So as much as it hurts you or me or Roy, it hurts the management team more because they are already massive shareholders and they are further away from unlocking that goal. So it really is a matter of, okay, now that you have that money, what are you going to do with that money to get closer to that goal between now and then?
Yep. Yeah. Can you throw up a related comment or question? Brain Cancer Warriors 6:28 p.m. question. I'm curious on your thoughts on that. Optionality can mean a lot of things. Myself, I don't think any of that is for that. I think that's such a low probability of actually happening. It's technically legal, but basically when the United States government had signed legislation allowing them to potentially privatize, this is like a decade ago. But the one thing that they had to do was basically show that selling the loans would actually be accretive. I don't remember the exact wording for the US government. And that's not how selling loans works, just because there is a default rate. Now, I don't know. I would be shocked if the United States government is able to do that for any meaningful amount at all. So, but what do you think?
I wouldn't be surprised. Crystal Point talked about the expansion of total addressable market for the student loan segment and what that would do as rates continue to fall and what that would translate to for SoFi. Now, whether it's originations on their own behalf or on third parties' behalf that they package into the loan platform business, the point still stands that the market is increasing as rates continue to fall. So, again, the underlying assumption is that they're going to use these funds for something that's accretive. Now, if they determine that paying down debt or going after student loans or whatever, anything in between, a product feature is more accretive than an acquisition, then I think that's where the trust comes in with the management team and like trust, because we cannot necessarily have an answer because we're outsiders looking in. The trust within the management team to do what's best for the shareholders at any given point. So if they don't do an acquisition, like last time, for example, they don't do an acquisition, they pay down some debt, the debt increases EPS, they beat their earnings much easier. Great, I'll take it. This time around, if they do something that expands their TAM for student loans, or they, whatever the case may be, it's going to be, and it's going to be management's best hypothesis of what is the most accretive move that they can be doing at any given point.
For sure, yeah. That's one of the interesting pieces too. Is we talked about this during the earnings for SoFi, and right before we said if they're going to do a equity raise of some part, it's probably going to happen like immediately after, or very close to immediately after. This was a longer gap, and that was really interesting. The reason why we thought if they were going to do a raise that they would do it so close to then is because of those PSUs that the SoFi leadership and management has. We see what's happened with the stock price. It was right there in the 30s. Stock markets are actually done well. SoFi has done the opposite since that equity raise, and it will recover. But that's typically what dilution does. And so this makes it harder and less likely since there's just 6 months left and it's a weighted average over a set time period for them to actually reach those. So I actually kind of like it just because, in my mind, Tevis, it's showing that the C-suite is not there for short term and they're not playing games. That this equity raise is not just something that's going to get them over the finish line to get the higher PSUs and have a higher reward and be rich and then be able to leave SoFi or something like that. But instead, they're like, hey, this is accretive to the business. We have a long-term mindset. We want to build things, and we're going to use this to build that. I think a lot of this is going to be used for lending. Crystal Point mentioned in that fireside chat that they were passing over $100 billion worth of personal loans, just personal loans, in addition to all the other lending ventures that, as rates do fall, student loans, for instance, and home loans, although that's not really impacted much by the rates that the Fed Reserve sets, they'll have a greater opportunity there. And he talked about just doing 5, 10, even 15% more of those type of loans, rather than just putting them all into the loan platform business. So you need money for that. And the great thing about being a bank and having a banking charter like this, a national banking charter, is you're actually able to lend against multiples of whatever you raise. So this, no matter how you slice it, whether they do they'll probably do a combination of paying back some debt, doing a lot more lending, maybe building some new products, maybe a smaller or a couple of acquisitions next year. It's all going to be accretive. Will everything work? No, but lending's pretty straightforward, and there's a lot of demand that's going to increase as rates fall. So,
and that demand, don't forget, is going to increase vertically and horizontally. In other words, they can expand their credit box to originate on behalf of others, or they can offer different types of products in student loans, particularly being the biggest opportunity there. So right now they're doing unsecured personal loans in a very tight credit box. And so it's like you can either expand the credit box and get a massively larger total addressable market in personal loans, or you can just go, one street over and do student loan with the loan platform business. And both of those are going to be really expanding their offerings for 26.
Definitely. All right. Do we want to go to NVIDIA China or another related Anthony Noto topic, WBD?
Ooh, okay. Yeah, let's go to the Warner Brothers Discovery piece. I think I made a full video about that. Um, and I think it's going to be kind of interesting to chat about.
Just so everybody knows, by the way, two things actually, real quick on SoFi. If you guys didn't follow us on Friday, Data Driven Investing announced that he is actually leaving where he's working. He's an engineer, and he's actually going to go to work for the office of the CFO in SoFi. And so that happens at the beginning of next year. So he's going to have to be a lot more silent on SoFi, but hoping that ends up, I mean, he's awesome. So SoFi is all the better for having him. The other is this, I believe it was this year, Anthony Noto was welcomed onto the board along with Levine. He's the architect, one of the architects of Ethereum that are on that board of directors for Warner Brothers. And I have to say that they're probably extremely busy right now. It's been a very fascinating week so far. So, Tevis, can you break down kind of what's been happening, and then we'll talk about this a bit?
Yes. Okay. Let's break this down. So over the course of 26, Warner Brothers has sort of struggled. Let's say Warner Brothers generally is like a sum of the parts type of play. It has all of these like disjointed assets. And what happened was back in September, Paramount made several bids for Warner Brothers, like over 6 different bids. And Warner Brothers kind of ignored all of them. And it opened up the bidding to other potential suitors. And in November, Netflix and Comcast arose as 2 top contenders. Netflix then, in the beginning of December, offered a bid for Warner Brothers Discovery. And by the way, I made a full like timeline video breaking all of this down. So let me share a little bit about that.
I love your timelines, by the way, Tevis.
It's just so fragmented.
Give you the nickname of timelines.
Timeline Tevis, yes, that's correct. Okay, so basically, Netflix offered them $27.75 a share and a mix of stock and cash, but they only wanted Warner Bros. So they wanted HBO, HBO Max, the DC Universe, and Warner Bros. Films and TV studios. What they did not want was they didn't want CNN, they didn't want TNT Sports, they didn't want Discovery, and all this other stuff. And basically, they're saying, hey, we want this IP because we want to dominate the the streaming space. We want to make a woke version of Game of Thrones, whatever, anything in between. They just want the assets. And then obviously Trump said, hey, like this could be a problem. We'll take a look to see if it's anti-competitive. Then Paramount was like, look, man, you've been ghosting us for like 3 months now. We're going to make a massive $30 a share offer, and we're going to go straight to the shareholders in a hostile bid. We're not going to, go through this like board approval. By the way, do you know that guy?
Yeah, looks familiar.
Yeah, it looks familiar. Anyways,
so busy right now.
Paramount is offering $30 a share at $108 billion enterprise value, and they want everything, including CNN. Now, you might be asking yourself, $15 billion company, $108 billion offer. Where is that, reconcile? Well, the CEO in season 5 of Succession, the CEO, David Ellison, happens to be Larry Ellison's son. Larry Ellison is basically worth like 2.5 Warner Brothers. And there's a whole bunch of extra funding. So you have Jared Kushner's private equity arm, you have $11 billion from the Larry Ellison family, and you have $24 billion from Saudis, Qatar, Abu Dhabi sovereign wealth funds. And so all of this foreign money all of a sudden is lining up to buy this company, and one of their assets is CNN. And that, not to give away the full video, go ahead and watch it if you guys want more details. But that, in a nutshell, is all happening ahead of the primaries the midterms.
Yeah. Yeah. And it's really interesting too, just like to see a little company like this out of the blue offer something so massive, which, obviously took a lot of work, but it came together pretty rapidly. Um, I'm kind of curious if we see more. So let me back up. I had a great conversation with an analyst last week, Devin Ryan, and one of the things we talked about was mergers and acquisitions, just a little bit. But there's a lot of analysts that are talking about this, like really ramping up, IPOs continuing as well, just because we've been through a lot of deregulation, which is helpful for mergers and acquisitions. So if this is going either direction, that'll be really interesting. I think it'll be conducive towards some creative mergers and acquisitions next year. What's really something to kind of keep an eye on, though, is that I can't remember the name of it. It's a cancellation clause, and that it basically, if it ends up not working out, Netflix will owe a good amount of money. And so we'll have to see. Warner Brothers stock, by the way, is doing very well in this. When you have multiple bidders, I mean, that's just a nice environment to be in. So let me see that amount that X is acting crazy. It's eating messages.
What amount?
The amount that would be owed by Netflix to Warner Brothers if they ended up backing out.
The breakup fees.
Yeah.
Okay, so let me break them down for you because I just coincidentally made a video on this. So funny enough, the breakup fees work both ways. In terms of okay, this is exciting. So the deal can be broken out into several different ways. So the main breakup fee is from a regulatory perspective. There's $5.8 billion that's payable by Netflix. So basically saying, okay, let's say I'm Netflix. I'm trying to buy Warner Brothers. And I say, hey, look, I'm making an agreement to you that I'm going to go through with this deal. But if this deal falls flat for any reason, usually regulatory, what I'll do as Netflix is I'll pay $5.8 billion to Warner Brothers as like, sorry for wasting your time, which is like these breakup fees are unprecedented. They're like the biggest in history. Billions of dollars for a breakup fee? Are you freaking kidding me? Like, dude, $5.8 billion is like saying, hey, let me pay, I don't know what to tell you. Let me pay you the entirety of Lemonade, which is $5.9 billion, just as a breakup fee, casually, right? So on the other
hand, I'll be okay with that. Give me that breakup fee, just whatever.
And it's like, it's crazy, right? Because like Warner Brothers was trading in the low teens until the summer. And now it's like they're a $70 billion company. But if you look at the valuation of where they were 6 months ago, this breakup fee alone from Netflix would have been like, what, 20% boost on the company? It's just insane. Anyways, if Warner Brothers now, I don't know that you know that it works two ways, but if Warner Brothers breaks up the deal because they're going to go for another bidder, they have to pay Netflix, I think, $2.8 or $2.9 billion. I highlighted it in my video.
Yeah.
Similarly, if Paramount, who also made a bid for Warner Brothers, the deal falls apart, Paramount now has to pay Warner Brothers $5 billion. And if Warner Brothers doesn't pick Paramount, Warner Brothers has to pay Paramount, I think, 2.7 or 2.8 billion.
Yeah. Somebody's going to owe somebody money.
Like, that is the only foregone conclusion in this entire thing. Somebody is going to pay somebody something.
Yeah. I mean, it's wild. Yeah. I'm really curious if we see more of that too, the breakup type of fees, because I mean, you would see that, but it's a small amount. It's like earnest money on a house. Usually those type of things are, $1,000 or maybe like, at best 1%, with rare exception, but certain environments tend to have, of course, higher earnest money, in this case, the breakup fees. So my breakup fee with PayPal, give me all my money back, please.
I was just waiting for you to notice it, man. It took me so long.
I have not been really excited to talk about PayPal. They've been not so. I could care less. I mean, I do care about the stock, obviously, because I'm investing and I'm wanting to make some money. But yeah, they've disappointed me in a number of ways over the last few months. Some have been a little bit noisier about it than others, but yeah, they are. underachieving. So I'm not ready to break up with them. I did end up tax loss harvesting all of my options in my main account. That's a smaller position of my PayPal. It's like 15% of my portfolio, not portfolio of my PayPal position, which is like 7 or 8% of my portfolio. So it's not a massive amount, but I ended up selling that, taking the loss.
Yeah, I oh man, this Netflix deal is going to be so interesting. And like there was this whole like conspiracy, side thing around all the special purpose vehicles that were filed over the past couple of days, and like these promises essentially made to the Trump administration that if they got in there, they were going to make like big changes to CNN, and it's kind of crazy, man. That like this is by far, I think, the most interesting news, like the most interesting developing story of 2025 for me, because it is like real world succession. It's so intriguing to just see all these like backroom deals.
Maybe of December, yeah. I mean, there's been so much that's happened in 2025. It's hard to just say that unilaterally. So
there's been a lot. I mean, look, what I will say is that we're going to see how this plays out. I don't know if this is going to be a very big sticking point, I think, because the midterms are coming up and because the CNN piece politicizes this, and you have this polar opposite dichotomy across either side of the aisle. We're like, I mean, Elizabeth Warren doesn't really need an excuse because she's out hating on everything, but she was out being like, we need to block this, and like all the left, the Dem regulators are going to block it, and all the right are not, and it's just like it's so politicized. This is the type of stuff that would make a Netflix documentary or Netflix series. Like it's got enough drama, enough intrigue, enough like tinfoil hat conspiracy theory stuff. So I think it has a little bit of everything, and I knew the video was going to underperform like crazy, like drastically underperform. And I was like, you know what? I kind of want to do the research for me because I want to like learn more about this. And I'm glad I did.
Yeah, it's very entertaining, and it's in the entertainment space as well. What do you think the end result will be, or do you not really sure?
I think Paramount will buy it. So here's what I think, and this is, I mentioned this in my video as well. I think what's going to happen. So David Ellison said this is not our best and final offer bid, which is a wild thing to say. He said it on like CNN.
Yeah.
Basically saying we're offering you 30, which is already more than what Netflix is offering. And by the way, Netflix tanked on this, and Warner Brothers Discovery went up on this. So Warner Brothers Discovery is currently trading for about $28.50, more than what the Netflix deal would be, $27.75. So I think Netflix has to up the bid as well, because like right now you're sort of facing a tough position. It doesn't really matter what the board recommends. Like you're just going to have a hostile takeover, and the shareholders are going to. Well, first of all, the board has a fiduciary duty, but the shareholders are ultimately going to have the final say. What I think is going to happen, and I said if I had to, gun to my head, do a play around this, I would probably do a play around, Warner Brothers Discovery stock. I wonder what the option chain would look like, because I think that Paramount is going to come out soon-ish, whoever knows, in weeks, days, with a revised offer of $32 per share. Maybe 32, wow. Maybe 33, and they're just going to up the bid. And here's why. Because Warner Bros. Discovery is going to argue that the news assets are more than $1 a share, which is what Paramount is valuing them at. So the difference is Netflix is offering $27.75 without the news division, and then news plus the three other assets, Eurosport, TNT, whatever. And then Paramount is offering 30 for everything all in. So basically they're saying, and I think David Ellison said it on the actual interview, he said, we're valuing the news division, like CNN, basically at $1 per share. They're going to argue, hey, it's actually $3 or $4 per share. They're going to up the bid to 32. And I think that ultimately, I think Paramount will get it unless they get regulatory blocks.
Yeah. I'm kind of
So
hoping Netflix wins out just because I already subscribed to them. But I think that you're right. Like the Paramount offer seems more attractive, especially in light of the comments. It's not their highest or best. There will be some negotiation back and forth too. Um, I'm kind of curious if in the negotiations, Warner Brothers ends up not having to pay any sort of breakup fee at all, whatever direction they go.
I don't think so because the actual like tender offers, the offers have already like the SEC filings are already there, and the breakup fees are in the actual filings themselves. So I think in either case, like you're going to revise your offer up or down or whatever, but the commitment is there for you to move forward. Now I'm not a lawyer, so I might be talking out my ass, but that's my understanding. I also want to answer this. If Warner Bros. Board gets drawn into a heated battle, is there a chance Noto takes any kind of hit which reflects SoFi? I don't think so at all. One thing I will say about the board is that there's been reports, because this is all developing. There's been reports today that David Ellison, the CEO of Paramount, has been calling up board members, and board members are starting to flip now on the Paramount side of things as well. Apparently, according to the reports. But who knows, man? Because like there's so much like media bias that's across the board on this entire thing. It's kind of crazy.
It is, yeah, and that's a really interesting board too. So, hmm. Yeah, I really wonder. I don't think that anything would push back on Anthony Noto at all. Like usually the board is with these sort of things. There's a few people that actually know who's on the board, and I think most people have no idea like what a board even is versus like much less who's on it. So they know the CEO, they know the CFO, all that sort of stuff. But yeah.
Mm-hmm. Yeah, we'll have to wait and see how it actually plays out. I think it's going to drag out, but I think that there's definitely a benefit for Paramount to close this deal as soon as possible. And really, I mean, look, Paramount only cares about CNN. I'm they're not going to come out and say that, but that's the perception, at least from a lot of the reporting, right? That's just the perception that, hey, we're going ahead of this election period. CNN is a very critical, news organization. So, well, who knows? I mean, it could force Netflix into a position where they're forced to choose to also absorb CNN or lose the deal altogether. Who knows what's going to happen?
Very interesting,
I just
especially late this year.
I just checked on that CNN or that video that I made with the timeline. It is like massively underperformed.
I mean, I have to watch it. I haven't seen it yet, but it sounds great. So that's a watch for me. Maybe later tonight. So I love the graphic too. So all right. So how about we'll talk about some NVIDIA in China as well.
Mm-hmm.
So we had breaking news that landed yesterday, specifically on Truth Social. The president had said that they've now paved an agreement for H200s for NVIDIA to be able to go ahead and sell those to certain approved buyers. And I was kind of curious what that language was. We got an update today from Financial Times that indicated that even though the President Trump said, President Xi was like, hey, this is great, this is awesome. Well, China also had banned NVIDIA from being able to sell except under approved circumstances. And so the context today that was given, and it's probably part of the reason why NVIDIA ended up fading most of those gains, was that the companies in China that are buying from NVIDIA have to demonstrate why a local product, a Chinese-made product, isn't sufficient for whatever they were doing. And that's probably going to be a hard ask, especially when the CCP doesn't really care what the answer is. They just want to develop that chip industry because it's so important. So I'm not saying that there will be no NVIDIA revenue, but there's a lot more moving pieces here. But it was really like well, I guess we'll start there, and then I want to talk about like the deal that the United States gets from the revenue from that, if there is revenue. Any like big thoughts on that, Tevis?
No, I mean it's been an ongoing situation this entire year. I don't think that anything I would say is new at this point.
Yeah, and so there was a couple of analysts I saw that moved and raised price targets. One noted and said They expect about 16% higher revenue for NVIDIA over the next year, and so they're raising their estimates accordingly. A lot of analysts are just kind of waiting, just because, and I think it's fair in this case, because we don't know exactly what this will look like. There's still a lot of moving parts between the U.S. and China trade relations, things to figure out. This is one of those, and I thought it was incredibly likely that NVIDIA would be able to sell again. Now they do have some Chinese revenue, but it's more on the gaming side, not on the AI chipset side specifically. So, and it's such a small piece relative to where they were before. Previously, I believe it was 2020, was it 2021, 2022? Chinese revenue was a meaningful amount. It's north of 20%. So, but yeah, the nice thing is for NVIDIA, you're not a shareholder, I am, but is that you have no guidance on Chinese revenue increasing at all, or their ability to be able to sell chipsets. So it's basically pure upside if it happens. And if it ends up not happening, it's not a huge deal for NVIDIA. They're going to be fine either way. The interesting piece there, Tevis, was that Trump said 25% of all the revenues from NVIDIA selling into China with those H200s would go to the United States Treasury. So it's not a tariff. It's a tariff on China. In this case, actually, China would be paying for it rather than tariffs being paid by us consumers here on this side. So yeah, that actually makes it even harder for NVIDIA, just because they may have the best product, but if it's 25% more expensive, maybe some people just say, hey, let's wait, or they have to sacrifice some margins there too. So, but overall, I think it's good, and it's showing that there's more trade normalization continuing to happen and talks happening between the United States and China, that we're not going to get another Liberation Day surprise, I think, even though there will be an on-again, off-again nature of a lot of this type of stuff, especially as it relates to NVIDIA between the US and China for a while.
Yeah, I don't know, man. I could eat these words, absolutely, but I would. It seems as though the tariff shock and awe is kind of quelling down. Even when he threatened tariffs on Mexico yesterday, it was 5% tariffs. Did you see this? And it was 5%. Did you forget a zero in there somewhere? So I think it's I think it's closer to the end than it is to the beginning with regards to a lot of this negotiating phase, right? And he talked about periodically, hey, her relationship with China is great, it's improving, so on and so forth. So I don't see anything there specifically.
Yeah. Robinhood. Couple of pieces with Robinhood that are really interesting, and you are a Robinhood shareholder, so let me tag this here, Hood. All right, so a few things with Robinhood. I guess, where do you want to start on Robinhood, Tevis, and we can break down the other stuff too as it relates. Were you more interested in predictions market and their own?
I want to start at why do they hate me and refuse to come to Canada?
They would make too much money, obviously, from you using the predictions market. So there'd be a lot of taxes.
It would just be me using the products and nobody else. I made this post and I thought Vlad was going to comment on it, but then I read it again and I was like, oh, maybe he actually took this as not joking. It's this guy really went to Indonesia before Canada. I'm going to crash out.
Yeah. Okay. So yeah, there's several different things. So one is, and I believe that this hit right after. Did they announce the partnership with Susquehanna last week? No, that was actually 2 weeks ago, wasn't it?
Yeah, it was.
Thanksgiving throws me off, man. I've still not recovered. Okay, so yeah, on this piece, they've already are moving into the region. They announced, I believe it's February or March during that investor day in New York, that they're moving into Singapore. And then this is something new. And so they're, rather than basically going through all the regulatory approval and everything for Indonesia, they decided, hey, let's just go for this. And so they've announced an acquisition. Now I looked up these guys. I don't know how to pronounce it, but Buana Capital maybe. They are, there's a lot of different brokerages out there. Indonesia is a massive, massive country with many, many people as well. If you look at the it's not a bell curve, but the growth curve, the growth chart of their demographics, that was made mention in the pressers by Robinhood, several others, a number of times, that basically they have a massive Gen Z that is, looking and hungry to invest. And that's why there's a lot of brokerages there. This speeds up their time to actually launch. And what we've seen it like basically with the United Kingdom is a very slow launch where they're slowly building and ramping these products. And people are like, well, what about options? And then they get options. And then what about margin? They get margin. And then they announced this, well, maybe it wasn't this month, but within the past 2 weeks that they've launched ISAs, which is basically the IRA, the Roth, the tax advantage main vehicle there that people use in the UK, which actually makes it a real platform now versus before. A lot of people said, hey, why would we use anything other than what offers the ISA? So I think it's going to be really interesting for Robinhood just to see how this launch goes, if this is going to be like fantastic acceleration that over this next year, that whatever those individual specific investing products that are unique to Indonesia, that those are they're already there, they have regulatory approval, and so they just launch. I'm also very curious, Tevis, on what they focus on too, because a lot of, I don't know Indonesia. I've had some friends, but it's like forever ago that are from Indonesia. I don't know if it's more of an investing culture over there or betting culture. Mainland EU is more of a betting culture for the most part than investing culture. And so if Indonesia is like that, I'm curious if they focus more on the predictions market side, and then they try to fill out their flywheel by investing, by doing the investing products, which maybe take a little bit more approval that they have this acquisition. So,
I mean, look, I look at the press release here and it says more than 19 million capital markets investors, so equities, and 17 million crypto investors. Those are pretty great. Like, if you had a market where, they're not like, what am I trying to say? I'm trying to say that it sounds like if I was a betting man, which I am, I would bet that prediction markets will take up faster than normal equity markets. Why? Because the ratio of crypto people to normal people is quite, like, it's almost 50-50, right? 19 million to 17 million. If it was like, hey, we have 50 million investors and we have 5 million crypto people, I'd be like, all right, maybe it's the reverse to that level of risk. But if they're already familiar with that level of risk because they're in crypto markets every day, I would imagine that the adoption of prediction markets is like a 2 millimeter shift. It's high risk, low capital, in immediate, gratification.
Yes.
Here, Banana Meatball says Indonesia cannot do gambling.
Is that I'm kind of curious on that. I'll have to look into that. Is that because of I know it's 90% Muslim. Is it related to that, or is it just a government ban that's not related to that? And so like that, the other question too, which you probably don't answer, but those two, hopefully you can, predictions markets, at least they're Kalshi, Robinhood, Polymarket, and others are trying to make the argument, and I don't think that they'll be fully successful, but they'll at least be partially successful, that predictions markets are not a one-for-one equivalent with gambling. I do think there's some overlap, and perhaps that what's seen as the overlap it just depends on the country. But
here's their boy Gemini saying gambling is strictly illegal in Indonesia. It's one of the strictest anti-gambling jurisdictions in the world. It's comprehensive across land-based casinos, online gambling, lotteries. Why is it illegal? And I think you guessed it, Roy, as to why it was illegal. Laws apply equally to foreigners. You know what I'm going to ask this thing? Where would predictions markets fall into this?
Yeah, that's going to be really interesting. I wonder if anyone, I'm very curious. I'll have to look more into that. Thank you, by the way, for that comment. That's, I didn't even think about that at the time. I knew that about, many Muslims and the Muslim faith and Sharia law too, which are not under Sharia law, I guess, technically, but yeah. Oh, it's still thinking.
In short, it says prediction markets will almost certainly fall under the definition of gambling in Indonesia, effectively illegal.
You know what we really need, Tevis, for this to know whether this is going to happen or not is Kalshi and Polymarket to put up those predictions markets on this, whether or not there will be a predictions market in Indonesia next year.
So hold on. You might find that you can access these markets via decentralized apps or by using crypto tokens like USDC because they do allow crypto trading as a commodity. While buying ETH or Bitcoin on a licensed Indonesian exchange is legal, using that crypto to bet on an outcome like on Polymarket crosses the line into illegal. Wow. Wow.
Very interesting. Yeah, that I'm gonna have to do more research there. Thank you again for that comment. That's great. One other thing that's related to Robinhood, there's a few other little pieces too, but I actually really like this, Tevis. I'm not sure if you saw it. Did you see Vlad's AMA yesterday?
Yeah, and I saw your response, and I was like, oh, he responds to Roy, but
Yeah.
he doesn't respond to the country where gambling is actually legal.
Well, it's because we follow each other. So yeah.
That's fair.
So anyway, I asked what his biggest personal goal was. I really don't know. Like Vlad is, he's a polymath. Like he would be successful and capable across many fields and disciplines. And you can like as if you get to know him or if you get a chance, and the more you see of him, as far as interviews and different things, like in a harmonic and everything, it's impressive. So I was like, it could be anything from like physical thing to like spiritual to family related to launching another, who knows? And his response is 2025 isn't over yet, Roy. I'm still locked in for December because we've got a lot going on. Many of our competitors take vacation days and days of rest, so it's our time to push hard. And that's one of those things that they're doing. Of course, they have another event that they announced when we were back in Las Vegas that is related to the predictions markets and also AI specifically here in late December coming up. I believe it's this next week. I have to double check. It's online. It's remote only. It's a yes/no event. So we'll have to see what that actually looks like. But man, Robinhood, like that's one of those things that it just makes it really easy for it to be my largest position because I know it's very cyclical. There will be a crypto winter. Robinhood's going to be very painful to hold then. But if I'm looking over a decade, Vlad is young and he's able to build other things and still have leadership here. I've gotten an assessment on the culture of that business and many of the other key leaders. They're not going anywhere now. Over 10 years, some will certainly. But like this cadence, this what they're launching, what they're building, what they're going for, it is absolutely relentless, and I love it. Not everything will work. Maybe Indonesia will be a flop. Who knows? But a whole lot of what they built has worked and will work as well. So, Tevis, are you buying more?
Yes, eventually I will buy more. I gotta unwind myself from the position I got into during drawdown. But I think within the next month I will be completely unwound. So what happened was I rolled a whole bunch of cash secured puts that just went underwater, but I rolled them when we were like at the bottom or close to the bottom of that drawdown. And now I could close off all of those cash secured puts at a profit. But I'm just letting the time value decay on them so that I can just like, instead of just breaking even essentially for the month, I'm just letting them ride for another month because expirations are like mid-January, mid-February for some of them.
Yeah, you got time on your side, so.
Exactly. So I'm like, I could, if I wanted to do like the desperate play, I could close those off and buy something immediately. But I'm like, why? I'm not in a rush to do anything. And I have the option of like, if we have a nice Santa Claus rally, then yeah, I could. Yeah. So taxes is a consideration. So I have plans to close off some positions for 25 tax loss harvesting, and then the rest I'm gonna move to 26.
Yeah.
I think the rolling also helped as well because like I realized the loss when I rolled, but then I don't realize all the profit. Does that make sense?
Yeah. What's next, Tevis?
All right, what's next, Roy? Let's take a look at the list. Let's consult the list. We have. So we talked about Netflix. We talked about HIMS. We talked about Hood. Okay, we can talk about Apple, BMNR, NBIS, Amazon. We can talk about Meta. We could talk about IPOs coming in 2026.
Yeah, let's do NBIS, Tevis, and I'm going to be right back while you launch that topic. That stock has been wild. I'm not in it. I was in it in the past. I've been eyeing it. It's interesting how it's moving. Oh, JP Morgan Chase is another one. That I see a comment right there. I don't know. We probably won't get to that, but yeah, if you guys are wondering why SoFi also went down today, probably because of that extremely bearish, like, okay, well, actually, real quick, before we get into NBIS, there's been a bunch of fireside chats over the last 2 weeks. Last week, we saw 3 of them. NBIS was involved in one of them. NVDA was as well. PayPal, SoFi, and a lot of them, the tone was bearish. PayPal, I thought, did a lousy job on it. Actually, I'll just be honest. And I was like, man, can you mess up a fireside chat more? And JP Morgan Chase came out with a resounding yes. It's down I think it's down 5% today.
JPM?
Yeah.
Jeez.
Yeah, I think it's the worst performer year to date in the Dow Jones, which is, I would not have said that. And like the craziest thing for me, let's do JPM real quick. We won't go deep level. I'm not investing in that, but it's worth a look. I'm gonna pull up. Okay, here we go. Pulling up a chart. Now I got to log in. I've not used the laptop to.
Well, I think also fun fact. Netflix has erased all of their I think they're only up 5% of the past year or something like that, because they just tanked so hard on this deal. But so yeah, speaking of falling on your face,
it's still better than PayPal though. So
okay, well,
so this morning I caught the amidst stream, and Key was talking about Grab and how it had been an opportunity cost, and he's still bullish and everything. I'm like, man, at least it's not PayPal.
every opportunity cost must be measured in units of PayPal.
Yes, it should. That should be a lot. Let me delete some of these comps because they don't make sense. That's all Mag 7. All right, here is JP Morgan Chase. Yeah, I've got everything hidden that should be hidden. So yeah, year to date, it has been pretty brutal. Let me add a comp here. We can just do the Dow, since it's in the Dow. So JP Morgan Chase is at, that's not right, is it? There we go. Yeah, I was like, that's not correct. It's up. I shouldn't be the least performing. Maybe it's the worst performing this month. But you can see this massive drawdown off of this fireside chat, where it was just relentless bearishness. And right when they started talking, I'm sure that shareholders are like, could you guys just shut up? And there was so many pieces that were just, it was relentless bearishness. There was macro pieces. There was consumer weakness stuff. There was opportunities that they weren't planning to go for. I looked at a feed of this, and it was just real time flying left and right. Actually, let's do one more thing as I share my screen, because this is really good. I'm not going to shill at Tevis, but Fiscal AI. One of the things that I love is when I don't have a lot of time, I can go in and view the transcripts and then just do a quick AI summary. Or I can ask it very specific things as well, as far as a custom summary, and say, what's all the bearish stuff that happened? And credit card charge-offs are actually adjusted down. That was one of those good things, but there was a whole lot of stuff that moved around. So the consumer piece was probably the biggest piece that scared the market even a little bit, because you could see a little bit of drawdown in the market too. But they had gauged it basically as resilient, but that there were cracks. And they increased the amount of expenses as well. There's a lot of reads that they gave that were just kind of interesting and weak. And then so then they gave guidance too. And that was a big piece of this as well. They're doing a lot of investments. A lot of this, by the way, it's not really long-term bearish, it's short-term bearish. I wouldn't even say bearish. What's happened with banks, and JP Morgan Chase is no exception, a lot of deregulation. And so they see an opportunity to actually build and do some things that they were prevented from doing significantly earlier. And so they're going for that, much like SoFi, that if you recall last week, Tevis, Chris Lapointe came out and talked and basically said that the lower end of the EPS guide that they had issued, I think back 2 quarters ago through Anthony Noto for 2026, that's what they're aiming for now. And it's simply because it takes a while. When you launch something new, it costs money, and the money doesn't come immediately back in an instant unless you're Robinhood for some reason. So that's basically it. But I mean, there was a lot. I'm not going to do the custom summary because it normally takes just a little bit of time. But there was a lot of bearishness and negativity. So And like if you look at most banks, including SoFi, they were pulled into it a little bit as well, guilty by association of sector, I guess.
Yeah, I don't have any comments or follow JP Morgan. I want to bring this up real quick before you leave, Roy. On the Vlad AMA, I would like to announce to this channel officially breaking news that we are going to get Robinhood in Canada. Rejoice. Vlad says eventually I want to expand everywhere. It's just a matter of when. Yay. Fantastic. Probably Canada's going to come after like freaking Bangladesh or something. So you got to take them in order of how big the market is, and Canada's a regulatory nightmare. Anyways, let's shall we talk Nebius, and you're going to abandon me for a second?
Yeah, real quick though, they did have acquisition through WonderFi in Canada, so I think that does pave some regulatory roads, because I know each province they have to apply to individually, which is just, it's a nightmare for companies. I don't know why they do it that way, but yeah,
because they don't want new competition is why they do it that way. The banking cartel up here.
All right, Nebius.
Nebius. Roy is pulling a reverse Tevis where he says, "Oh, let's talk about this," and then leaves. I do that all the time. Nebius, look, Nebius is having a bunch of news. So first of all, they had a short report, which is kind of BS. It's not consequential. But there's really two pieces of news that I want to cover with Nebius. And one of them is the Avride Uber partnership. Let me see if I can pull that up for you guys. Avride and Uber announced the partnership for Dallas. And I think this is really going to be consequential to the valuation here. Avride is owned by Nebius. They're launching their robotaxi in Dallas. And Avride is kind of the small itsy bitsy company compared to all of these other players in the robotaxi space. Tesla, Waymo, which is Google backed. So it's really bullish, man, because they're going to be collecting all of this data, all the autonomous miles driven, all the deliveries, customers, whatnot. They're going to be perpetually learning. And if you have a space where, autonomous full self-driving, autonomous robo-taxis, whatever you call it, if you're going to have that in the future, you're going to have multiple competitors, and Avride is going to be one of those players. And I think the partnership with Uber really validates that even further, because Uber's like, an $80 billion company, something like that. And guess what? Nebius owns a massive chunk of Avride. I think it's like 80-something percent, 83% or something. And Nebius is a $24 billion company. And Uber last week went up 4% on the back of this partnership. Nebius was down 2%. People just don't understand or give any credit to Nebius's subsidiaries at all. And then, so that's number one. Let me walk through number two, and then I'd love your comments on both, Roy. Second piece of news I posted this morning. So we have here a major land acquisition by Nebius in Missouri. Nebius has acquired 398 acres in Missouri for a massive AI data center campus. I'm going to make a full video about this with like more detailed breakdowns. So whenever I get a chance, but it has 800 megawatt capacity across 8 to 10 buildings. Guess what? This would be the first fully owned and operated Nebius facility in the US. I believe they only own the Finland center, and the rest are through partnerships. Like the New Jersey one is through a partnership with Data One. So this would be the first one in the US that they actually fully own out. And of course, Nebius is down 2%. I think it actually closed down like 4% today. The reason why is because this is not like an official PR of the company. It's just brought from public land, city council records that this was acquired. So we're going to hear probably in Q1 of 2026 around this news. But we've been talking about different potential new sites for Nebius. We talked about Alabama. We talked about Indiana. We talked about Dallas. And now this is Missouri. that's coming out. So it's going to be crazy, man, because we have Vineland, New Jersey, and we have Finland, we have Israel. But in the US, the expansion is going to be quite rapid. And I just none of this is being priced in. None of this is being priced in. Nebius is trading for a price that's lower than their last, than what they were trading at when they reported earnings. Before they announced the Meta deal, before this Avride Uber partnership, so much has happened since that time, so much execution, and the stock is just not reacting to it. There is accumulation that's going on in Nebius right now. Every day it's a little bit up and to the right. But if any of these PRs dropped, we've bought, land in Missouri. This is going to be the build out phase. And we're going to be operational in 2027. And here's the hyperscaler we're servicing. This thing will jump $30 to $40, just as it did with the Microsoft deal. So I just think that I really love this, because this is true due diligence backed alpha, where people are looking at, city council records and determining that Nebius is actually buying all this stuff up. And we know that Nebius doesn't really expand until they have the demand on the other side, until they have a commitment, until they have a client on the other side. And so for the fact that they are, it should be pretty straightforward as to what it tells you. So those are the two pieces of news for Nebius. Both are very bullish. And I just think both of them are getting no love.
So on the conglomerate side, so on the AV Ride side, I guess let's start there first. I've never seen AV Ride. I know a little bit about it just because I did invest and then investigated in Nebius, and I just, with the proceeds, ended up buying more NVIDIA instead. It's hard for me to determine and figure out how credible that is. It seems credible, but is this if you were going to rank Tesla robotaxis and Waymo and AV Ride, and there's a bunch of others, dozens of others as well, would this fall way under that, or do you think this has a credible chance of taking a decent chunk of the market?
Yeah. Okay. So I'm assuming you're talking about the technology, the
Mm-hmm.
product offering.
Mm-hmm.
So, okay, how I would rank the product offering is Tesla is obviously number one, because Tesla is built for full self-driving with embedded cameras. Waymo and Avride, I know for sure, but I believe Waymo is also doing this. But how this partnership is working in Dallas is they have these Hyundais, and they've retrofitted them with Avride's driving systems, the autonomous driving systems. So they put equipment on these cars to make them robo taxis. Essentially, they don't have cars that were built from a factory floor with embedded cameras as robo taxis. So similar to Waymo, I would put them more in line with where Waymo is. Obviously further behind, they're definitely a third place, because they're just starting out, and Waymo at least has, I think, 2,500 cars on the road or something like that. So they're third. But look, man, if you have a space where this is super mature, let's say it's expanded across the US and maybe internationally to some areas, Western Europe, North America, whatever, then it's even the third place person is going to get is going to catch a bid. And especially when the third place person is so small. So
Charlie had an interesting comment there too at 724. He said, I see Uber Eats AV Ride bots all the time in Austin. I see the cars around, but not as often. Yeah, I'm going to have to take a look. I live close enough to Austin. I got some family that lives up that way, and we're planning to go up there anyway sometime around Christmas. So maybe I'll have to take a look and see if I can spot any. And the cars, I don't know. We'll see if I can find them and use them. But I'm very curious. Just
one last thing on that. Okay, guys, I understand. Oh, they look ridiculous. Hyundai variants are not a robotaxi. Guys, they're likely a $2 billion to $3 billion company. Their last amount that they raised was $375 million, not billion, $1 million. These guys are tiny. And so I think when you think about it from that perspective, the addressable market, the runway is so massive compared to where they are from a valuation perspective that there's a lot left to go.
Yeah, that's a good comment by Manuel. Manuel was, by the way, the one that brought NBIS to our attention initially. I got in at 24, and then I got out at like 40 something. And Tevis waited because he's an expensive rich guy. He doesn't mind spending extra money. I'm just kidding. But yeah,
hate money. Yeah.
Manuel says AV Ride comes from Yandex's self-driving division, which started in 2016 and has always been one of the most advanced in the world. I think the challenge, though, is two things with this. One is it's hard we're so early in this business venture to really know who is actually going to win. There's a lot of competitors out there, a lot. You could look at dozens and dozens and dozens. It's not going to be a winner take all, but it might be a winner take most. It's too early to tell. Probably there will be more diversification, and so it's hard to price something like that when you don't know like how legitimate, how real is this business, especially when you're just doing early pilot phases. The second is when it's not really something that's core central to your business. It's not like vertically integrated like everything that Tesla does, but instead it's kind of tangential. They have a couple of those where there is overlap with what NBIS does, but it mostly goes back to their roots from their prior identity as a company. And you see that with ClickHouse as well, which it has value. It's increased in value, and they have a number of these for NBIS too. So I think maybe those are the two reasons why the market is not giving them some appreciation. Is it's harder. Like they're looking at NBIS for the data center play more so than everything else that they have, and they do have a lot else to offer. And how is it actually going to perform in this space over the next 5 years? Too early to tell.
Yeah. Okay. Yeah, we need to do a show with Manuel at some point, just like a refresher, I think, on NBIS, because there's so much that has happened with regards to the company that I think makes it a really interesting proposition. And when Manuel was initially pitching NBIS to us on the stock tank, the stock was like $40 or so, $35 less. It
was like 30 something bucks, 32, yeah, 33.
Well, yeah, sure. In the 30s, I think that it's more de-risked now than it was in the 30s because there's so much more clarity about the future roadmap and what that demand is going to look like, what the subsidiaries are going to, the subsidiary growth looks like in the future. And so I think in the 30s, there was a lot of like faith baked into the growth assumptions. And now a lot of them are validated through the hyperscaler partnerships and whatnot. Let's see what Manuel says here. I'm actually not a big believer in robotaxis as an investment. I just think it will be fairly easy for NBIS to secure a good exit event and get several $1 billion in non-dilutive funding. Keep in mind, right, like NBIS is what, $24 billion right now? It's like it's similar to what we were talking about with Warner Brothers Discovery, breakup fee. Like the breakup fee is 20% of the company's market cap. Okay, cool. That seems pretty significant, but okay.
Yeah. Well, and the nice thing with NBIS, like falling in terms of price and why it's really back on the radar for me is I agree with you, Tevis. Like it's back then I was like, okay, I think it's a good company. I think that they'll do quite well. NVIDIA is like a sure bet, even though I think NBIS might outperform. Now NBIS has done a lot better than I even expected, even relative with this drop down. But ClickHouse, AV Ride, and there's a bunch of others as well. All those things, like if all those things are worth zero, NBIS might still be undervalued here, just based on the only thing that I think I've seen some shareholders not particularly like, and it's I've seen similar pushback with OpenAI, although a very different type of business, because the demand is so massive, and the capital X expenditures needed to capture that demand are immense. Versus like 6 months ago, where we might think, okay, they're going to be profitable by this time. That's been pushed back down the road. Now, the reason why I think is incredibly valuable, and I'd be very excited as a shareholder, because the demand is so ridiculous right now that they just have to scale and focus on that. And so that's maybe part of the reason too. Like the stock ran up a bunch. Yeah, shareholders that have been holding for a while can't really complain when you're up immensely, and then it drops down 30%. So yeah, ClickHouse is looking very compelling. It's definitely not worth zero. And they own, like, remind me how much they own of ClickHouse. It's
28% maybe. Manuel can remind you. I'm not good with this stuff. I think
yeah, it's a decent chunk, but I don't remember the exact breakdown. So
one thing to also keep in mind, this is yeah, so it is 20%.
thanks,
I'm not as stupid as I look after all, guys. So here's another thing to keep in mind that obviously the market is not pricing in at all is this post. I made a video about this, and you guys, I'm making NBIS weekly recap. So if you guys haven't checked those out, then definitely do that. The EU, Roy, is set to allocate 20 billion euros on building 5 AI gigafactories. You know what company has a presence in the EU already?
NBIS. That's why I really liked them. Of course, Manuel, he talked, and that is exactly what they've done. Is he said, yeah, they're focused more on building in the United States just because the demand is there. But I love that they have such a big foothold in the EU, and I think that that'll benefit them immensely. And case in point.
Yeah, man, it's like the market is not giving them any respect. So, like, okay, $20 billion with 5 AI gigafactories. Like, let's just say NBIS gets one of those. You know, it's like, all right, cool, $4 billion. Like, the entire market cap is $24 billion.
Probably more. And then, I mean, like, you've seen this a number of times. Like, Microsoft was probably like the big example. They'll just come out with a massive, huge headline, and of course the stock just rockets. Then I would not, like, I'm kind of curious, Tevis, do you play covered calls on this?
On NBIS?
Yeah.
So I do have some right now, but they're like they're like 135 for like December 19th, and I was thinking about closing them at, like, I think I'm at 75% or 80% because I know that one headline dropping and I'm blown out of the
Oh yeah, you're done. Yeah, you're done. You're out of it.
The only reason I have covered calls right now in NBIS is because I have cash secured puts at like 110. So
like I'm sitting on a chunk of cash right now. I have more coming in January, and I've bought a few things here and there, but I'm largely like focused on raising cash, and so selling the terrible options that bled so much in PayPal was part of that move. There's been a couple other little moves too. There's like 10 like theoretical, if this happens, then I'll buy this. And NBIS is one of those things. And what I'm thinking as far as NBIS, I'm not sure that I'm buying it. I think it's a very good company and it's a good opportunity. Of course, the cheaper the price gets, the better the opportunity looks. If it keeps falling like this, Tevis, and it's not just, everything's falling together or some horrible thing happens with NBIS where it's like, okay, AGI is real, it's done by NBIS and it's going to take over the world. Like, that, obviously that's silly and it can't happen. But barring something weird like that, I may just buy some calls, just ride some leaps and call it a day.
I have January 2027 185s, baby.
Yeah, I've not done that in a while where I'm just like, but the price would have to fall more, or we get, everything else is going up and NBIS is being ignored, which can happen. I don't think it's that crazy. And so I'm monitoring it a lot more closely over the last few weeks than I was, a month ago. So let's shift on to Q&A mode since I've got a meeting here in about 25 minutes.
There's so much. We didn't talk about Meta. We didn't talk about the Amazon Postal Service news. Like, okay.
All right. Let's do a Friday special edition of Bootleg.
Friday special edition of Bootleg. It's happening, guys. And we're going to talk about a whole bunch. The IPO market for 2026 with SpaceX and OpenAI and Anthropic. Like, man,
yeah.
All right, Q&A first, and we're gonna do all that on Friday. Okay.
Oh man, I got to do a separate video on that too, just because what's happening in the IPO space is really fascinating, especially with some of these. Like, we're gonna likely see SpaceX IPO next year.
Yeah.
OpenAI might not be next year, but it's probably going to be 2027 early if it's not. There's a little bit more to go, but they need capital desperately. Private equity market, they've sucked up about as much as they can. They'll continue to get some more as well, but man, they need money. So it's going to be very exciting. It's a great time to be invested in the market. So a lot of beneficiary, by the way, for Robinhood, like IPOs. Man.
Yeah. And SoFi.
SoFi too. Yeah.
I don't know. Maybe I don't. What do you guys think? Do you think I should tomorrow?
No,
I'm going to the office tomorrow. I maybe should, right? We'll
no,
see.
keep it.
We'll put a poll up. Okay, hold on. Let's put this poll up. All right. We'll let the people decide how much of a homeless person I look like. Let's go to Q&A, Roy. AMD has well outperformed NVIDIA this year. Do we expect this to continue?
Probably not. No, it was being disrespected by the market, and I don't think it's like elite generational company like NVIDIA, but it's a very good company. And Lisa Su is a very good CEO, was CEO of the year like 3 or 4 years ago. So a lot of that was just a reversion where the market realized, hey, AMD actually has something of worth. I think the quality difference was really seen as it related to that deal where for Netflix partnering with OpenAI, it basically, not Netflix, NVIDIA, it meant that they acquired part of it, OpenAI, and it was the reverse in that deal with AMD and OpenAI as well. So they're not as strong, but they're still a great company. I would not expect anything could happen over a short term, but like from now to the end of the year, next year probably NVIDIA is going to outperform it. But I think both will do well, but NVIDIA is an easier bet, I think.
Yeah, I would say I don't know, but I think AMD has climbed quite a bit this year, and so
Oh yeah,
yeah,
can't call it advanced money destroyer anymore.
yeah, exactly. What time on Friday, Shane? Great question. 6 p.m. most likely.
Yeah, I think that we can do 6 p.m. Eastern time.
Okay. I'm getting facial hair advice from the chat, which is great. Are we expecting a green day as a result of interest rate cuts?
I don't think I think it's already priced in. It might be green anyway. So
Yes, is what yeah. Soybeans bailout? Yes.
I think he's referring to China, U.S. China ended up not buying soybeans at all from the United States. There's a lot of farmers that are kind of left in the lurch. There's some things you can do for soybeans, but nobody buys as much as China. So yeah, I'm not sure though. I
thought they solved that.
I don't know that it's fully resolved, but there was back in November, late November, when China U.S. kind of made several announcements around that time span. There was one mention of soybeans, and I don't recall enough to comment on it.
Yeah, I don't know enough about that on the macro. Soybeans Tuesday is my favorite channel. Nice. Okay, so a couple of people are asking quick thoughts on tomorrow's reaction for rate cuts for SoFi, BMNR, and I think there was another person asking about NBIS rate cuts. Look, man, if the market's green, it's going to be green. Like everything trades in as a whole these days as a result of algos. So if the market as a whole is green, then generally speaking, these will be green. BMNR was up like 10% today.
Yeah. BMNR is doing quite well recently. So Tom Lee's, just by the force of his will, is making Ethereum slowly go back up. That's been kind of interesting too. Is like the market's back near all-time highs, and he had a lot of the names that fell, over their most recent drop down, like NBIS, like BMNR, like crypto. They're nowhere close to where they were. So interesting. I mean, that happens. It's not crazy or wild, but
HIMS, we talked about HIMS at the beginning of the show. Timestamps will be hopefully included if I remember. Broadcom is about to cross $2 trillion, yet it's so undercovered and misunderstood. Any thoughts as to why? They actually report earnings this week, so we'll see if Broadcom is going to pull another rabbit out of the hat. But great company.
I've never heard of them, so no, I'm just kidding.
Yeah.
I don't know. Like there's some names that retail just doesn't seem to appreciate enjoying. It doesn't mean you can't make immense amounts of money. I think they're a very good business, but I like super concentration in my portfolio. And so since I'm invested in NVIDIA, even though they're very different companies, I'm not saying that they're competitors or anything like that, but it's in the same space. And I'm like, that's probably enough, unless maybe I find something that's like a microcap out there. than I did in their test system. So I'm unlikely to invest in Broadcom at any point, just because of that. I can't answer for everybody else. So.
Look, man, I won't say it's undercovered and misunderstood when the stock is up 75% year to date. It's like, I'm pretty sure people understand what they're doing in relation to AI if they're up 75% year to date.
Under-owned by retail, maybe.
Yeah, under-owned by YouTubers, which is like, does it really matter at the end of the day if people on X or YouTube are not talking about Broadcom? I don't think so. So, which company are you looking at, and why are you looking at other countries? That part I don't understand. I'm trying to remember where in the segment this might have been. Maybe when we were talking about Indonesia.
I think he may be asking specifically why invest in companies that are not American. If I remember, there's some comments about that around that same time. I don't have much international exposure, but I mean, there's a lot of opportunity there. The problem is there's some geopolitical risk usually with that sort of thing. And if you're investing in an area where it's harder for you to like know and experience. So like case in point real quick on this, Grab seems like a good business. Doesn't seem like an amazing business, but it seems decent and it's going to probably perform well. They're pretty massive. I don't live in Southeast Asia. I don't have friends that live there. I've never used Grab. I'm probably not going to use Grab anytime soon. It's harder for me to look at a business like that and want to invest versus, like here domestically, Tesla. I own 2 Teslas. I've used full self-driving. I understand the products. I use their insurance. I mean, like I have friends that have worked for Tesla. Like it's a whole lot easier for me. And so, but yeah, I have 2 international investments. Well, main one is Nubank. So, but yeah, I rarely invest internationally.
The company that I am looking at currently that I did purchase shares of, it's now about 7%, 6.5% of my portfolio is Meta, META, Meta. And I'm going to buy more of them. I'm going to double up that position. Like I said before, I want to make it a core holding along with Amazon, which I haven't got around to buying yet because I'm cash strapped still. But by January, the hope is that I'll have a significantly larger both Amazon and Meta position. So stay tuned for that. I post my portfolio every month whenever I don't forget.
And you won't buy NVIDIA.
I'm not against that either, man. I could potentially buy NVIDIA as well. You can't. Yeah. I don't even know what I'm going to do next, let alone you guys. Okay. New buys for 26. Right.
So I mean, like we talked about some of those, like Nebius might be a new buy or a rebuy for me. I've been buying VG, and so I'm continuing to investigate more, and I've been adding to that position. I would say if I had to say right now, I'd probably double my position again in January, and might double it again in February, might double again in March, and then at that point it'll be at the right size. So, but more research is needed there, more time as well. Air test systems is another one I'll probably add to, but like new buys. When we have crypto winter, Coinbase is definitely on the radar. If Cloudflare ever falls enough, I'll buy Cloudflare in a second, in a heartbeat. Yeah, there's a few other names on the radar too, but that's kind of it for me.
VG is definitely the more interesting one out of that list because it's so depressed right now, and I think if you can hold it, then it'll do very well for you.
It's backwards, but those are the 5 names that are on there. And some of those are more like waiting for the right value, like Rocket Lab. I've done the due diligence there with Cloudflare as well, with Coinbase. I need to do a little bit more. And Accelerate, I exited, and I may get back into, but that one's like further down on the list, I would say. So we'll have to see.
Gotcha. All right. Is Noto still dark? No comments today. No, not to my knowledge.
Yeah, he's on the board, man. Yeah, he's busy right now with all that stuff that we talked about at the 36-minute mark.
Yeah, exactly. Do you see 2026 a lot harder to make money in? No. Quantitative easing is starting. It's going to be an election year. There's going to be incentives to drive the market higher. We're going to get a very dovish Fed. So rate cuts are going to happen. So I think 2026 is going to be a good year for the market. I think that the administration is incentivized not to create unnecessary volatility in the market. We'll see what happens. But I think definitely the first half of 26 is going to be good.
I think the first half might be bad, or at least the first month. Mostly related to midterm and seasonality. So we've been on a massive run the last few years. Sometimes the market likes to give that back, even separate from Liberation Day type events. And oftentimes after a very strong year, you'll see some selling pressure in early January as people take gains, waiting for that time just because of tax loss harvesting. Although right after that, usually the market does pretty well. The challenge in 2026, and we maybe look at this in more detail at a future episode, maybe on Friday, is on midterm years, until the elections actually hit, there's uncertainty. The market does not do well in uncertainty. It doesn't mean it can't go up, but there's usually some pretty big drawdowns along the way in the midterm years. I think the average is around, it's north of 10%. So far from a crash, but we could have some chop, and I think we probably will between now and then. Now, that isn't to say that there is an opportunity. I actually think that there is. I love that, because that's one of the complaints of this year is, looking at names and so forth, is sometimes this year, there's actually, I'd say about half the time this year, it was tough to find value in the market. Like, you could find isolated names here and there, but everything ran up so far and was so expensive, it was hard to continue to buy some of those names, like including SoFi, great name, Robinhood, Palantir, like they're way up. So I think the market will give some opportunities to have some, maybe not to the extent that we saw in April and Liberation Day, but some deals and steals that maybe by the very end of the year or 2027 will look phenomenal. But yeah, midterms.
Yep. Roy, you have a hard stop in 13 minutes?
Yes.
So I'll try to get you there in time. Should I bet on Polymarket if Jay Powell will call? Not financial advice, man. Not financial advice. What's your thought? What's the thesis on oil stocks going up in 26?
I mean, I have VG, but it's natural gas, or LNG rather. Yeah, oil, I don't know. There's a lot of energy demand, so maybe that's it, but.
Yeah. We got to talk about data centers in space too. I think that's a really, okay, I'm gonna make another list of like Friday topics, and we have to go from there. Do you expect to see a real boost in SoFi's numbers related to crypto? Depends on what numbers you're talking about. Revenue, I don't think is going to be really like moving the needle. I think members, it is going to move the needle somewhat. Yeah.
Yep, and products.
SoFi price target 2026. I don't know, man. I made a video about this. I can't remember what I said. I think like 45 is what I said. I might offer Matt Money the chance to double or nothing for 45 end of year next year and see if he takes it or not for our bet. But we'll see, man, because SoFi right now is trading for 26.50 or something like that, and our bet is for 25 by the end of the year. So we're
well, we can do double or nothing either way. So
I think we're too close for comfort.
Yeah.
We need to pump to 30 or something, and I'll be happy.
Yeah, mine is 65 for reference. So
I love that. I hope we do that. Global transfers and payments through tokenization. How huge is that, Roy?
Not immediately huge, but and we'll have to see how it works. They're focused on the remittance side at first. That won't be massive, but they'll carve out more space in that. And I think Tevis is right that it'll add to members more so than anything. We'll have to see what the payment product looks like. I personally think that they're going to have a hard time with it. I could be wrong. I would love to be wrong as a SoFi investor. Payments is a tough space, even in crypto and with tokenization. Now, there's a lot that they can do with tokenization, which I think is going to be very accretive to shareholders and the bottom line. On the lending side, they've talked about tokenizing deposits as well. They've talked about tokenizing corporate, corporate bonds. Anyway, like you can look at Figure, which I am. Oh, that's one name that I might buy next year too. But Figure everything to do runs on a blockchain, and it's by intention. It's the same guy that started SoFi, started Figure. SoFi, it wouldn't surprise me if they, I wouldn't say copy, that's the wrong term, but if they see what Figure has done and they're like, hey, this is a no-brainer, that makes sense. What has to happen probably first is that they actually launch their stablecoin, and after that, we'll have to see how it's used. Primarily, it's going to be a payment piece, and there's a possibility there. But the nice thing is, with SoFi being priced at where it's at, that's not priced in at all. Success of that is not priced in for crypto at all, period. And so I love that. If we were trading at like $100 a share and everything was riding around crypto, I would be hitting the exit button really quick, because that is far from certain.
Yeah, and Figure, I think, is like a perfect contender for you to gift someone for Christmas, because it's like it's right around that stock price where, you know, you can gift a couple of shares or something. But
probably, yeah, I've got like 3 in mind, and that's one of the 3. I don't own it yet, which is a problem.
You have to own it. That's the
and I don't mind owning it, because it's like I keep asking myself, like, why don't I own this? And the bottom line is I have too much exposure in that space, so I would need to do some trims, including in names that I'd rather not sell right now, and that's painful. So,
okay, last question, because we both got to go. You guys going to buy any IPOs next year, like the potential Anthropic or OpenAI IPO?
Yeah.
For the answer to that, you're going to have to wait until Friday, because Friday is where we're going to talk about IPOs holistically. And we're going to dedicate a whole segment to 2026 IPOs. It's going to be a lot of fun. Friday, 6 p.m. Definitely follow us there. The very rare time we do 2 bootleg episodes in a single week. And with that, I want to wrap up, because I know Roy has to go. Thank you so much, everybody, for watching the Bootleg Weekly on Tuesday. Follow us for more. Go watch my Warner Brothers video, and Friday, 6 p.m. See you guys here for another episode of Bootleg Weekly. Goodbye.